Please welcome to the Financial Brand Forum, Country Operations Director at Jumo, Mr. Jeremy Quenu.
Hello, everyone. Let's try that again. Hello, everyone. Awesome. So as mentioned, my name is Jeremy, and I'm joining you from the lovely continent of Africa, specifically West Africa, Ghana. Now, I work for one of the largest fintechs, Jumo. Jumo is present in 6 territories across the continent, starting from South Africa all the way to East Africa, back to my home country, Ghana. Now, I had a running joke with a friend today that it almost sounds counterintuitive that the organizers of the show, Jeffrey, Amanda, would reach out to someone in the developing third world to come all the way to the first world to tell them about their future, right? But then again, Africa does have the tendency to leapfrog technology. So the mobile revolution that has hit the continent has left more Africans having access to mobile phones than basic amenities like toilets or water. So I believe that we're more open to change. We embrace technology more openly, quite simply because we have a lot less legacy and a lot less to lose. So that's just to say that despite our different levels of economic development, we're all on this journey of technological disruption together. So over the course of the next 40 to 45 minutes, I'm going to do my best to share with you what we should all expect from the future of fintech in a post-pandemic world beyond disruption. If that's okay with you, let's jump straight into it. All right. Now, every time we try to project out into the future, I'm reminded of something that the renowned author Brett King says. He said, in order to be a good futurist, you need to be a good pastist. And what he means is, what you try to do is not only look at what's going to happen in the future, but you tend to look for analogies of what might happen based on what's happened in the past, right? They say history tends to repeat itself. The only caveat is, each time it does repeat itself, it gets more expensive. So if you look back at what's happened in the field of financial services historically, going back to the 2008 financial crisis that caused that increased distrust in the incumbent financial institutions, that left the door wide open for fintechs and cryptocurrencies to manifest. And more recently, with the COVID-19 pandemic, you tend to see that the world is digitizing, right? Which is why the word fintech has become such a mainstay, and also why the word disruption has become such a buzzword in recent times. So we're digitizing because we want more immediacy, we want more ubiquity, we want less friction, we want access to channels of commerce that can scale, right? So there's over 400 technologies right now that in some way, shape, or form are set to, or are predicted to impact an industry or several industries, including the financial services industry. But the best way to fail is to fall victim to the fear of missing out. So chasing after every single emerging technology that is touted to be the disruptor of the industry, right? If you look at what happened with the COVID-19 pandemic, now according to our friends at McKinsey, the pandemic accelerated the digital transformation journeys of a number of institutions by as much as 7 years. Now what that tells us is that although the strategy and intention to serve customers in a way that is more user-friendly, more customer-centric, already existed, it took the pandemic and lockdowns to get them to refocus and reprioritize the specific technologies that would enable those outcomes. Because ultimately, that's what technology is. It's the enabler, not the goal. The goal is to reach your customer where they are and provide them as much value as possible. And the strategy is to adopt a more customer-centric way of thinking so that you are able to transform at the core rather than at the fringes. So if you look back all throughout history, you see that there's been technologies that have come in and were either written off initially and then became the bedrock on which our financial services industry was built, internet being the best example. So let's use an analogy that I really like from Matt Griffin that he calls the time traveler's dilemma, right? So just think for a second, or just imagine for a second, that you, from the year 2022, was able to travel in time back to the year 1980. You transform or you teleport into a room such as this with people from the industry, and you try to give them a sense of what to expect in 2022. So you say, hey guys, you need to be ready for 2022 because For instance, something like cybercrime is going to be the fastest form of criminal activity that has the potential to impact your business or industry. And so you need to start recruiting cybersecurity experts, data scientists, software developers. Now, all of these roles we know to be true because we actively recruit for them now and they're in demand. What do you think the response of the room would be? Well, I think that if they didn't immediately call you crazy and they gave you the benefit of the doubt, they might ask you a question like, well, what is cybersecurity? And you might say something along the lines of, cybersecurity is a way to safeguard your online business from nefarious people trying to steal from you in creative ways on the internet. Again, after a few weird looks, they might ask you, well, what is the internet? And you might say something like, the internet is a global network of interconnected computers that allows the free flow of information, allows people to engage and transact, and has become the very bedrock on which our businesses and society is built. Now, mind you, 1980 was just 40 years ago, and the internet became mainstream around 1992. So trying to explain to a group of people who are pre-internet babies what the internet is, much less going on to things that are based on the internet like self-driving cars and smart wearables, would simply fly over their heads, right? So at that point, what's most likely going to happen is you might either just be thrown out of the room, if not put in a straitjacket in a padded room. So I think today, or at least today, we can be a little bit more open-minded because we've seen firsthand how rapid the evolution of technology actually is. And despite the fact that innovation is usually launched in its very basic state, with each iteration, all the gaps that exist are filled to the point where millions of people are able to integrate them into their daily lives. So quite simply, the point there is that disruption is getting faster. Now, this is a popular graphic that depicts this fact. So we've come from a point of view or a place in time where innovations that actually change the course of human history, like airplanes, automobiles, telephone, used to take as many as 50 years, 60 years to gain the kind of mass adoption that is required. And now we're at the point where innovations like the Pokemon Go take just 19 days. Recently, or most recently, games like Call of Duty were able to achieve 100 million downloads in its first week. So the point is that the timelines for customer acquisition have shrunk, disruption is getting faster, and more so, it's actually accelerating. Okay, now let's take a look at, we've looked back in time. Let's try and project outward into the future as well. So once again, let's imagine, right? So let's imagine now is the year 2042. The same date, 16th November or 15th November. I forget what date today is. But you're in bed and your smart sensor buzzes against your cerebrum to wake you up. Now, as you wake up, an optical projection of your transactions is projected onto your field of view. So you can see all the transactions from the previous day. And from what you observe, your portfolio performed higher than the index because it was boosted by your new IPs, your NFTs, your smart contracts. Now, in the same transaction feed or information feed, you're able to see that you have 81 meetings scheduled for today, but only 3 of which actually need your attention. You have a digital doctor's appointment at 10 o'clock, and the results of that annual checkup will be shared with your bankers or credit union or insurers for an underwriting review. Now, you can also tell that the last meeting of the day is going to be with your digital banker, and you need to be ready for that one because you could potentially secure that home loan to get that dream house that you wanted, thanks to the enhanced performance of your digital twin. Now, you ask your digital twin as you get in the shower what the performance or what the transactions were like last night, and they inform you that there were a total of 36 transactions, making up $36,000, 70% of which were performed or processed with other digital twins, 20% with digital humans, and only 10% with actual people. Now that you have your update, you can go have your shower, go walk your kids on the beach, because your digital twin is going to take over. Now, what do you guys think? Is this scenario facts or fiction? Is this an actual reality that could be or not? Okay, so this particular scenario was taken from John Bleak's book, Digital Twin. And the reality is that the picture of the future that has been painted may never actually materialize. But what if it did? What if we're going into a world where what the customer wanted or the experience that the customer demanded took precedence over anything, including the technology that would deliver it, and your industry or your business was simply not ready? What would be the consequences to your business, right? So I think the whole point is to be a little bit more open-minded, and it's embodied in this quote that we have to be curious first and not judgmental. Nobody can actually predict the future, but if you have a mindset of rigidity, it becomes very difficult to see that far out. Okay, now let's look at one of the things that are happening right now that we can tell is going to bring the inevitable future, right? So we're coming from a point of view where financial services were offered by the incumbent financial institutions, banks, as a bundled service offering for the customer, right? And then fintechs came in and came and, in the name of democratization and decentralization, they unbundled financial services. In doing so, they were able to set new standards of customer service. They were able to bring about benefits like mobile-first experiences, and they actually spurred competition in the industry, which ultimately benefited the end user. But as a result of that, what we now have is a bit of a fragmented customer experience. So now customers have multiple different apps, applications, programs, platforms that they need to go to access the same kind of financial services. Now, even though they're better, they're more enhanced, over time, it becomes difficult to manage. And so what's inevitably going to happen is we're going to revert to where we came from, and there's going to be what is called a rebundling. So rebundling essentially entails that the entire suite of financial services that a consumer needs to manage their lives, needs to manage their finances, are going to be put in a specific place or bundled in a specific place in order to, or with the aim to save time, save money, and give convenience to the customer. And this is, as much as it sounds like retracing your steps, it's actually in line with what the customer demands already. It's rather putting yourself in the shoes of the customer, seeing the world through the eyes of your customer, and working backwards towards the technology. So again, the technology doesn't take precedence, right? And this is actually happening in China and spreading to other parts of the world. So WeChat, for example, is the definitive super app, neo-super app in China, with which consumers are able to book a taxi, send messages, make purchases, inquire about financial products or services. So rebundling is in line with what the customer wants, and it's more about being able to identify the customer's needs and pain points and reach out to them and provide them solutions that give them where they are and give them a wholesome experience, right? Now, that is also a good segue into what is now being called fintech as a service. Now, whenever you try to scale or go global, you most likely will have to sign local agreements, deal with local regulation, possibly set up a local entity. And that can take months, if not years, especially if you're trying to conquer the world, right? And that's where fintech as a service comes in to try and do the heavy lifting associated with scaling. So the best analogy for fintech as a service is to look at what Amazon did with AWS in the field of technology and financial services, right? So before, if you wanted to set up your own service, you had to find your own database, build your own firewall, get the space to accommodate the servers. If you needed to expand, you had to buy more equipment, sign more agreements. Now with AWS, one API, one integration, you're connected, one agreement, one invoice, one payment, and you're good to go. And that's exactly the same kind of service offering that fintech as a service is going to offer to global merchants. So right now, all you need is one API, one invoice, one recon file, and you get an access to a bundled suite of fintech-related services that is going to handle your operational fintech expansion issues so that you can focus on your core business, right? And it's all going to be powered by the fact that there's increased adoption in technologies like cloud software, artificial intelligence, integrated with financial services. There's the growing utilization of smartphones and fintech-related services through digital platforms, right? Our friends at the markets and reports guys tell us that by 2030, or the better part of this decade, the market value of that fintech as a service industry, which is already in existence, is going to go upwards of 900 million, right? And as we've already said, the COVID COVID-19 pandemic accelerated some of these journeys, right? So essentially, the message here is that all your consumers are partners on your mission, right? You need to think of the consumer as in the room. Earlier on today, we heard that you need to involve a consumer who is thinking outside of the rigid lines of what the internal corporates are, and it gives you the creativity to develop outside those lines. Okay, now let's move on to one of the technologies that has gotten a lot of hype lately, Web 3.0, right? We hear this a lot recently, right? So Web 3.0, quite simply, is said to be the bundle of technologies that are supposed to usher in the next generation of the internet, right? Our friends at Bain & Co. tell us that that ecosystem now boasts thousands of companies, and there's substantial investments, upwards of $18 billion, going into startups within that ecosystem. And now you have big players like Nike, Google, JP Morgan, all experimenting with the technology just to understand what the benefits potentially could be and what that technology could unlock for us. But let's take a step back and try and identify where we've come from to get to this point, so just so we're on the same page. So remember the days of Web 1.0? Right? This is the era between 1990 and 2005, where we had basic websites that were all built on HTML, right? I shared a joke with my friend where he said that these websites were essentially glorified Microsoft web pages, right? Remember the days of dial-up modem, when you had to actually wait for the phone to connect to the internet with that screeching noise that, in my opinion, could cause seizures, right? I actually don't. There should have been more reports of people having seizures waiting for the internet to connect in 1995. I don't have the data, but I'll check. But essentially, it was a very static content delivery network, right? It was called the read-only web because essentially that's all that you could do. But it was what spurred the dot-com bubble that lasted from 1990 to 2005 and brought about some of these internet giants. And now fast forward to today, where we have Web 2.0, where the internet began to evolve to more user-generated content, more user-generated experiences. And this was called the read-write web. Right? This is where terms like blogging, vlogging, social media networking, social media, podcasting, all of these terms became popular. Right? This is the era where this is what gave rise to the tech giants like YouTube, Facebook, Wikipedia, all of the ones that we know today. And essentially, it invented what is now called as web as a platform, where you could actually build software applications on the web as opposed to on the desktop. And now we're at the point where we have Web 3.0. Now, Web 3.0 is essentially, as we've said, the bundle of technologies that are supposed to usher in the next generation of the internet. And the expectation here is that the internet is supposed to be a little bit more intelligent and should be able to disseminate and basically distribute information in such a manner that would be akin to how humans do this. And this is based on a number of technologies, right? So I don't know how many of these you've heard about, but it's all part of the suite that make up the Web 3.0. So edge computing, where data is being processed closer to where it's being generated, so that you can now process higher volumes, you can now have higher processing speeds, so you get like larger or more insightful or insights-driven leads for actions, right? We have the semantic web, which is the expectation that machines will be able to interpret and recognize data and information in such a manner that is akin to how humans do it, both contextually and conceptually. I mean, it sounds a little bit pie in the sky, but that's the expectation, that data is no longer owned, but it's shared with different web services that provide different views of the same kind of web data. And this is going to be a hyper-connected, more engaged internet, right? You add in blockchain technology, and you're supposed to get the benefits of transparency and security that an open public ledger gives you, right? If you add in AI and 3D graphics, we are now moving into what is being called a more immersive internet. And we'll talk a lot more about that when we get into the aspect of the metaverse, right? That word. And so all of this is going to bring about more connectivity, ubiquity. That is the theme of what the internet is going to be. Now, there are lots of applications of Web 3.0 in the field of financial services, but there's one particular application that's quite interesting and has gotten a lot of attention recently. And that is the concept of DAOs, or Decentralized Autonomous Organizations. Now, frankly, I think DAOs, or Decentralized Autonomous Organizations, are one of the most intriguing concepts that have been developed or implemented via the blockchain technology. Now, DAOs essentially are entities that are where the members that run on smart contracts, essentially. Now, smart contracts are self-executing contracts. So the members of a DAO have tokens, and using these tokens, they're able to vote on the initiatives of the entity. Right? All the financial transactions and rules of the entity are encoded via smart contracts into the blockchain, and hence the name decentralized and autonomous, because you do not need any centralized authority to govern this entity. And because of these features, the DAO, it has application in financial services. So, for example, it's decentralized. Because it's on an open blockchain, an open public ledger, no single individual or group of people can influence the organization's future for their own selfish purpose, right? The transparency, it's a public open blockchain. It can be audited at any time, and this brings about better trust and stops or prevents corruption. The aspect of security. These smart contract codes are tested and validated before they are deployed, and this allows, and because it's a public open ledger, it prevents or at least reduces the chances of attacks and actual fraud. And when it comes to efficiency, once you bring in automation, once you bring in smart contracts, you remove the paperwork, you remove the human element of mistakes, and essentially you bring about more efficiency. And now there's applications of that in banking. So in banking and credit unions, right? So because one of the things that customers really value about financial institutions like banks and credit unions is the element of trust. I mean, I know historically there have been events that have sort of caused turbulence when it comes to the trust that people have of financial institutions. There was a report by Ernst & Young that says the younger generation are now placing fintechs at the top of their most trusted brands list, with banks kind of like slowly lagging behind. And this just tells us that it's not enough to just give your customers a good service or product. They need to actually trust you. And that's where the elements of DAOs could come in to support banks. Credit unions tend to have the same kind of structure as DAOs. It's all member-driven. But now with a DAO, a credit union is not limited by the geographic location. They're able to scale beyond borders because there's no element of physicality involved, and they're able to go beyond borders. But there's a lot that we can say about DAOs, but it's just for us to know that these are the things that are in the pipeline that the fintechs are actually running with. I work in a fintech, and you should hear some of the things, the ideas that are thrown into senior level boardrooms that you think are far out, and then you hear the budget that has been allocated to that, and you know that they're not playing, right? So now let's go into something that is more general that most people can relate to, and that is artificial intelligence. Now, obviously, artificial intelligence is no stranger in the field of financial services. It's the expectation that machines will be able to make decisions based on the data and information that is presented to them in the way that humans do. Now, I have a colleague who always argues that true artificial intelligence doesn't exist because machines are not ever or at the point where they can make subjective decisions based on what information you present them. But the reality is that there are applications of artificial intelligence in financial services already, right? If you look at the consumer finance space, there's already the presence of chatbots that are powered by natural language processing that are able to give customers the established digital communications with customers, right? Earlier on, we heard a note, and it's also a quote from Accenture, where they said, we've gotten to the point where we've gotten very good at delivering virtual or digital experiences that are functionally correct, but emotionally devoid. So even though you do have chatbots that are available that are able to engage a person to solve their issue or to respond to queries, there is that lack of the human touch, which is what the aim of things like AI, or that's where the goal is. It's already used in wealth management to generate personalized or tailored insights. It's used in corporate finance to combat and detect fraud, to analyze trends that would hitherto go unnoticed by the human eye, right? But one of the more interesting applications of AI in finance is what is now being called digital twins. Show of hands, anyone who has heard of digital twins? Oh, nice. That's great. So the concept of digital twins is beginning to become possible because in the world where most companies are reimagining themselves for a digital-first customer experience, where the evolution of technology is making a lot of things that were previously seen as impossible, possible. The potential, the possibility to have what is called a digital twin is now live more than ever. Right? So a digital twin essentially, by definition, is a digital replica of a physical product, process, or service. So you take something from the real world and you replicate it digitally. But one iteration of digital twins that is very interesting is the concept of digital humans or digital colleagues. Now, the digital twins essentially are to enable you to simulate a product or process or service so that you are able to identify risks, foresee opportunities of growth, or even prevent disasters that could have happened in testing. Now, the digital human is supposed to be that overlap where you're now able to have the digital experience, but also have the human touch. And so digital humans are essentially human-like AI-powered characters designed to be interacted with by people. It's supposed to be the successor to the chatbot, an upgrade to the chatbot. I think it's easier to demo or show you what a digital twin, a digital human or digital colleague is, rather than trying to explain it to you. So take a look at this video.
Hi, my name is Fred. No, I'm not a real person. I am the new digital human from Render People. I am a virtual 360-degree copy of my real self. Therefore, I'm able to talk, to smile, to laugh, or to cry. Just like a real human being. So the possibilities are endless. I could be a speaker moderating your next digital event. I could be your virtual assistant for your online shop. This outfit suits you. Shall I add it to your cart? Or I could tell you the status of your car inspection, keeping you updated. Fully digital and all without you having to be on site. And this is only the beginning. The only limit is your creativity.
What do you guys think? Scary? Interesting? Exciting? Hands up for interesting. Hands up for ridiculous. I think the only limit is your imagination, as he said, right? But these are the kind of things that are in the pipeline that people are envisioning is going to be the future of how we engage and interact with people, right? They assume that the younger generation is going to be used to these kind of engagements or expect it because they're getting it in the area of games and that are fully immersive. So what do you do now, assuming this is going to be the future? Well, we have a few points from the AI transformation playbook, right? So where you start from is you start to execute some pilot projects, right? You know your business more than anyone else. You know exactly the aspects of your business where if you run tests that actually brought value would gain you the kind of buy-in that you need. Building an in-house AI team. So initially, you do want to outsource to external AI experts who have more experience in the field. But in the long run, if you want to be more efficient, you would have to have your own in-house AI team so you can protect your IP and you can execute on those small projects. You need to provide broad AI training because no company has enough AI talent. It's scarce. So the best you can do is, with the technology that's available, massive open online courses, you can upskill your existing staff to get to the point where they do appreciate what the future holds and they do understand what the potential benefits are. You develop an AI strategy because obviously you need to make sure that the initiatives are in line with what the organization's goals are. You can't just go off in any direction just because AI is the next big thing. And in line with that, you need to be able to communicate this and over-communicate this to the point where you get senior leadership buy-in, you get the understanding of everyone else. Okay, so obviously, it's going to be difficult to lead or to be in an AI-first world or to try and establish your company as an AI-first institution. And this quote says it all, right? it usually is going to be, as they say, very difficult in the beginning, messy in the middle, but if you're able to figure this out, or at least you're able to project outward to what the possible future can be, work backwards to where you are, and try to do your best to fill in the gaps, it gets much better. Now let's get to the metaverse. Now the metaverse is a very interesting concept. I really like this particular topic, and it was made popular most recently by Meta, formerly Facebook. But the actual term metaverse has been in existence since 1992. There was an author, Neil Stephenson, who coined the term in his book called Snow Crash. But I doubt that Neil, in his book, expected that by 2022, this would become such a buzzword. So the metaverse is essentially supposed to be the future of the internet. So there are those who still feel that the metaverse is a naive joke, basically. It's never going to materialize. But there are some that also believe that via the metaverse, the internet is on the cusp of an evolutionary leap. So you have big players like Microsoft, Facebook, Tencent, all making big bets on the metaverse. But just so that we're on the same page, let's try and understand what exactly the metaverse is. So the acronym XR stands for extended reality, and it's made up of virtual reality, augmented reality, and mixed reality. So starting from the middle one, augmented reality, right? So I think most of us were introduced to the concept of augmented reality somewhere in 2015, 2016 with the Pokemon Go application, right? So you would see a bunch of kids running around with their phones out. You ask them, hey, what's going on? And they tell you, we're looking for Pokemon. And that's one of the best examples of the application of the technology. Another would be the IKEA Place app or virtual place app, right? Where you could have a virtual model of their furniture that you could overlay into your space just to make sure that the furniture matches, the carpet matches the drape before you make the purchase. And that was another application of that particular technology, right? And so augmented reality essentially gives you a view of the physical world and then overlays that with digital elements. Then you have virtual reality, which is a fully immersive digital environment. So you see the headsets, the VR headset that are popular now, so the Oculus, the PlayStation VR, there's HTC Vive. But they basically take away the physical element and you go into a fully digital world where there's digital elements and you're basically in an alternate reality, basically. And then there's the element of mixed reality which joined the pack. Now this tries to give you the best of both worlds, and mixed reality was actually coined by Microsoft. I think they felt that they were getting left out, and they came up with their device, the HoloLens 2, or the HoloLens 1, now the HoloLens 2, which tries to give you, the device itself has a glass that covers the screen that allows you to see the physical world and overlays that with 3D holograms. Right? Now the difficulty of explaining what virtual reality, mixed reality, augmented reality is quite difficult. So it's easier to show you, right? So if you look at the seats in front of you, you'll find that there's headsets. I'm just kidding. I saw this guy do it today, and I wanted to do the same thing. It didn't work. But I do have a video that actually shows the concept that I'm talking about. So this is the Microsoft HoloLens 2. It essentially is supposed to be the functional version of what has been used for gaming so far. So this is supposed to be for industry utilization. So right now it's being sold to the tech people in engineering. What it does is it gives you a view of the physical world because of the glass, but then it is also matched with the Microsoft Mesh, which is the software, which allows you to be able to overlay that with holograms so that you can actually see what's happening. And then it has spatial awareness. I actually sat on a flight with someone who had a similar device on their head, and I asked them what they were doing, and they said they're able to pull up the 3 screens that they use from work and engage with it. Because it has spatial awareness, it's able to detect hand movement, right? But right now, it's super expensive, and it's only given to a select few. But eventually, with its iteration, it gets better and better. Moving on from that, you have the fully immersive type of VR experience where you are actually in an entirely digital world. So this is basically what we have in gaming now. So you go in, you're basically hiding behind an avatar, and it's fully immersive. The best bet that you can have from this is to have a picture of your physical world, such as this, but it's not really the physical world. It's a replica of the physical world in a digital environment, right? So Accenture defines the metaverse across different environments. Quite simply, right? So first and foremost, it's a place, right? It's a destination, no different from someplace downtown New York, someplace in Shanghai, Las Vegas. It's a place that people go, a location, a destination. It's a population, so people are actually going there to meet and interact, such as you have here, as opposed to being forced to interact over a two-dimensional static screen, right? And if you take that to the next logical level, just in the way we can own property and assets, it's also, you can own property and assets in the digital world, or in the metaverse, sorry. You can own land that is bolstered by NFTs. You can buy digital versions of physical objects. And that is what leads to what the opportunity for financial services are. So in the world, in an actual world where you have, or in a virtual world where people can actually own assets and property, it now becomes a question of who is going to be that player that is going to facilitate transactions in an entirely digital or virtual world. Who is going to be that custodian of virtual assets, where there's no longer fiat currency, but people are holding cryptocurrencies, they're holding NFTs, they're holding central bank digital currencies. Who is going to be that leader in that space? I frankly believe that it's going to be a joint effort, and there's not going to be any one bank, because it's going to be a game of collaboration. But we begin to see increasingly that other banks or other institutions are dipping their toes there into that space. So in South Korea, we have banks that are launching metaverses so that customers are able to access personalized financial institutions. In France, they've launched a virtual reality app that enables retail bankers to access their account activity. And even Bank of America is leveraging some of these metaverse platforms for training. If you go all the way to India, you're beginning to see that there are institutions that are trying to be enablers of the metaverse. So they allow banks to onboard or create their metaverses, and then they sort of collaborate or facilitate all of those technologies. And then in South Korea, you're beginning to see something that is actually quite popular in Africa, where there's collaborations between mobile network operators and banks to develop new technologies that are touted to be the future of financial services. So the opportunity is there for most people in the metaverse, right? So about 20 years ago, we started with online banking. About 10 years ago, we got into mobile banking. The metaverse is expected to be a continuation of that, right? Trying to create experiences that offer the customer value. And not only is it being used to enable online and mobile banking, it's also being leveraged for staff training, right? So you want to onboard a new staff, rather than giving them a 100-page PDF document, you actually give them a metaverse experience that allows them to see the history of the company in a fully immersive way, so that it's less boring and that people learn faster, right? It's an opportunity for people to engage. As we've said, the experiences we've created are devoid of that human touch. They're functionally correct. And the metaverse is trying to maintain the digital experience, but add in as much of that human element as much as possible. And it gives you the opportunity to reinvent the customer or the financial service experience or the banking experience around this new customer that is more virtually inclined. And in that sense, you're able to reimagine financial services for people who, as we've said, are no longer interested in the physical engagement, but are now looking to engage on a more virtual level. They now have virtual assets, virtual currencies. They're governed by central bank digital currencies and the like. So the important thing for financial institutions to do is to form a metaverse strategy, because obviously there's no point in just being there. You actually have to have a purpose, project outward to where you think your consumer is going to be, and work backwards to where you are. Just being there for the sake of being there doesn't make any sense. Now let's move on to the final aspect, which is the workforce of the future. Now, in a world where the customer is beginning to become increasingly impatient, they want more immediacy, a lot of institutions are trying to reimagine themselves for that kind of world. Now, not only would you require there to be new technology, there's also going to be new skills. So we're going to take a look at what the workforce of the future looks like. Now, there is a concept that was put out by JLL of what the future workforce would be like. So it's not just about these skills that are available, but essentially how work is going to be done in a world that is powered by AI, machine learning, all of these technologies, Web 3.0, Metaverse, digital twins. And I think they captured it quite nicely in this video. So let's take a look at this for a while, and you let me know what you think about this concept.
Morning, Jill.
Good morning, Amy. Where would you like to work today?
The office. What's the weather like today?
The temperature is 18 degrees with a 57% chance of rain. Are you ready to start your day?
Give me 10 minutes.
Okay. How would you like to get there?
I'll walk.
Do you want to ride?
No, I'm good.
Thank you. Careful, Amy. Obstacle ahead.
So once again, what do you guys think? Interesting? Hands up. Scary? Worried about your data? Worried about AI knowing so much about you? I understand you. So it's really interesting, some of the similarities that we have with you guys here, right? So the pandemic led to fully remote working, and then we went into what was called hybrid working. But in Africa, we tend to have this term called phygital, right? It's a combination of physical and digital. And it's a way that you design products because most people are semi-literate at best. So you have to be able to design a product that has a very seamless handoff from the digital to the physical in case the product actually, a consumer actually does need help along the digital journey. And this looks like one of those things that was designed in such a way that there's a combination of the physical and the digital. So that is projected to be the kind of workplaces that we're going to be having, where there's that overlay of all these technologies creating a phygital working environment. Now, assuming this is actually going to be the way that we work, what do you do to start preparing your workforce for that future? So very quickly, so going from workforce planning to work planning basically means that you tend to look at what kind of task will be carried out in such a world, and then map that back to the kind of skills that you would need, and then you design roles around those skills, right? You tend to pivot the workforce around the value of AI. So as we've said, upskilling people in terms of AI by simultaneously giving them those skills, and then using AI to challenge traditional business models to open new value streams. And then you scale up those priority areas that you require in order to be ready for that kind of world. So the action items essentially are what we've echoed all this time. You have to work backwards from the future. Next is you have to see the world through the eyes of your consumer, as we've mentioned. And then you have to focus more on the experience and less on the technology, because in reality, the customer doesn't care what the technology driving the product is. All they care about is the experience and the value that they get. And in that way, you are able to recoup if you're able to deliver on that. So I'll end with this quote that is from a poet, Amanda Gorman, that I really like. And it basically says, let us not return to what was normal, but reach towards what is next. I think is a very powerful statement that captures the spirit of everything that we've spoken about. And I do hope that I've shared some valuable insights that will at least inspire you on your journey towards the future of fintech that we know. I've used up all the time, so I'll be hanging around if you want to catch me for a quick question, quick chat. Thank you very much, and enjoy the rest of your day.